Thanks for joining me today. Let's start off with the resources space because, I mean, Kumba Iron Ore share price really being hit by the negative news around the Wildcat strike there. Do you just think this was kind of knee-jerk reaction from the market because they did say that it doesn't have an effect right now on production at a significant level?
Yes, I agree. I think it was knee-jerk, and there's a lot of uncertainty and obviously a bad feeling about the whole labour force striking, and the big part of the labour force in South Africa that's actually part of the strike up until now. I think I saw a figure that said 75,000 workers, mine workers, were striking, and you know, that's not settling information. Now this we know that there was only 300 of the workers at Kumba Iron Ore that started the strike, and it is at this moment still an illegal strike. So hopefully they can remedy that before it gets out of hand. It is a very difficult situation to remedy in South Africa, as we all know, as we've seen over the past couple of weeks. But the fact remains that Kumba now is trading at a cheaper price. So for people who is looking for that higher dividend yield and keen on the iron ore sector, that's probably a good time to look at it.
But this of course creates uncertainty, and you don't know how much more miners are going to strike, and that of course is the negative side of the coin. You know, there'd be those that argue sell the share price because of the uncertainty, or sell the share rather because of the uncertainty.
You're right. It could be people who are of that view could decide to sell it. The thing is, if you're an investor in a company that domiciles and that actually does all its business in South Africa, like Kumba does, and like some of our other miners do, that is a problem, because they only produce assets that come from Africa, or South Africa for that matter, and that the workforce we have here is more volatile than we see in the rest of the world. So that definitely remains a very big uncertainty for these companies.
If you were an investor right now, would you be then perhaps taking some money out of the resources space and putting it into other sectors?
Not at this space. We actually accumulating into companies like Billiton and Anglos at cheaper prices at lower levels. They are at, we've said this a couple of times on air before, but they are at PEs that are at ultimate lows. And if you were a buyer of these shares over these periods in the past, you were a big gainer and a very happy investor a few years later.
I suppose if we're talking about the retail resources today, Cynthia Carroll, a nod of confidence from Anglos being appointed as chairman of De Beers. Not a big piece of news, but I suppose it is good for Cynthia, and there's been a lot of questions around her leadership at a time of uncertainty for the company.
I also would think that is a very big vote of confidence into her. We all know that Anglo has actually increased their shareholding in De Beers, so it would make sense for De Beers to appoint someone on the board that's, you know, much closer to the decision making of Anglos. And I think for Cynthia on her side, like you mentioned, you know, her she wasn't in favour so much with many of the other Anglo team, and this might just be a turning point or a place for her to show some of her steel.
Yeah. In terms of the big news on the day, of course, we're just talking about Pick n Pay and you know, Richard Brasher moving over from Tesco to Pick n Pay. Firstly, what did you make of this piece of news? Because it's been a long wait, and finally they've come through with this new CEO. Well,
the day that we heard that the CEO of Pick n Pay resigned, there was also a negative hit to the share price, and this was very well taken by investors. I think people are relieved to see that there's some direction, and I don't think that anyone expected a CEO of Richard's caliber, and this is a very good sign for Pick n Pay. The problem still remains that you know, it's not only one person that can make or break the whole success of a company. In Richard's case, he has the right attributes, he has the right experience, he's got more than 25 years in this industry. He helped build Tesco up to the 47 billion pound industry they are today. And he has the right experience in the right fields that Pick n Pay acquires. Like we mentioned a little bit earlier, the membership cards that they've issued. Pick n Pay has actually managed to increase their membership to that Smart Shopper card to 5.7 billion, which is a significant base. Yeah. Now, if they can actually start using that base and making
tailoring their product range, basically
making that a useful, those shoppers make them clientele, that will be very helpful. You mentioned, you know, the space that they have to target. We know that Woolworths has performed exceptionally because they target the higher end of the market. People buy at Woolworths. Shoprite has done the exact same at the lower end. Pick and Pay is in the middle, and that's a very difficult space to be. So the sooner they can start focusing on an area that will really contribute to their earnings, the better.
I mean, you also argue sometimes, I suppose, if you had to look at Woolworths, because looking at it as a whole, it also targets the middle when it comes to clothing. And then you've got Pick and Pay, who are trying to also edge into that part of the market. But that's still a very small part of their earnings so far. It's an interesting trend where you've got international CEOs or international chief executives being brought into South Africa, because you had Ian Moore being brought over from Australia to head up Woolworths. What do you make of that?
Well, I think both these men have actually established a name for themselves and have reached high heights in their industries in their respective countries up until now. And I think this might just be the new challenge for them, or a very big stepping stone into Africa. We know that Africa is a very big story internationally, and especially the retail side of Africa. So I think this is a very exciting stepping stone for them.
And it's good that we're attracting talent. It's good that we have people of this caliber coming into South Africa and wanting to take the lead of companies that, like Pick and Pay, have been struggling. Share price wise right now for Pick and Pay, time to get into the stock as we have more clarity in terms of management going forward? Well,
unfortunately, the PEs of all our retailers are still very, very high. It is very difficult to justify an investment into a company with such a high PE. They are all well over 20, and in Pick and Pay's case, it's close to 30. You know, then it's still quite difficult to justify buying a share at that price. So I'd not buy it, but I must say, like Warren Buffett would say of Apple, I would definitely not short it. The retailers are performing well. We've seen the great total return they've given investors over the last 10 years, the last year, the last 3 years, where we know some of the other sectors in South Africa haven't managed to do the same. So I think I wouldn't sell, or personally I wouldn't sell any of my shares in the retailers, but I wouldn't buy them at these prices.
And international retailers versus local retailers, because many say that they're a lot cheaper and a lot more attractive.
Well, especially if we look at Tesco's. Tesco's is a company that we favour, that we do buy into our international portfolios, and Tesco is trading at a PE below 10. Now, we know that their earnings came out today a little bit below the expectation, but it's still a very solid company with a massive clientele base, and I don't see that turning around very quickly. And we know in situations like this, where there's still very much economic uncertainty going around in Europe, people still have to buy food, and they still have to buy, you know, just basic necessities.
Yeah, it's defensive.
Exactly. So that's why this is such a good option to own, and at a much, much lower price.
Well, an interesting comparison there, Tesco and Pick and Pay share prices. Thank you so much for joining us. Mia Kruger, Portfolio Manager at Kruger Internasionaal.